I am Dan Russell, an Agriculture Manager here at ACM. Today I'm going to discuss payments on account for self-assessment taxpayers and when there could be scope to reduce the July payment. When it comes to self-assessment, if you have a tax liability in any given tax year above £1,000, you are obliged to make 2 advance payments on account towards your tax liability for the following tax year. Each of these payments on account equate to 50% of the current tax year and need to be made by 31st of January and 31st of July of the succeeding year. Making 2 payments on account was designed by HM Revenue and Customs to ensure that self-assessment taxpayers were not in arrears, which benefits the individual to spread the cost of their tax liability, and it benefits HM Revenue and Customs as they receive the money in advance. However, HM Revenue and Customs acknowledge the fact that all self-assessment taxpayers' income can fluctuate from year to year. If for any reason you think that your trading profits or other income will be lower in the following tax year, a claim to reduce the payments on account can be made. The claim for reduction can be either done online via our online HMRC account and choosing to reduce payments on account by making the claim using a form called the SA 303. If you use an accountant to prepare and submit your tax return, this can be done when submitting your current tax return. Whilst this can assist with easing the amount needing to be paid in the coming year, this should be carefully thought about. If your income ends up being the same or higher in the next tax year, you will still have to pay the same amount of tax, meaning that you have only delayed the burden. And if you reduce the payment on account and then it turns out to have been underpaid, you will have to pay interest on the outstanding amount, which could significantly increase your tax liability. On the other hand, if for any reason your payments on account paid in the year are more than your liability, you will receive a refund of the overpaid balance from HM Revenue and Customs. It is always best to seek advice from your accountant or tax advisor in relation to what levels of payments on account should be made. A simple discussion on income projections for the following year can assist with predictions for the levels of tax due, and advice can be given whether any reductions could be claimed. If you would like any further information or advice, please get in touch.